Hey traders, and welcome back to Mindfully Trading. In this video, I'm going to share with you a simple break and retest strategy that I use that allowed me to gain a really sweet profit day trading the Forex markets this week. This strategy is super simple. In fact, I traded it whilst I was looking after my two preschoolers. Now, I started the week trading my usual pair, which is pound dollar, but I wasn't having a lot of luck. I took a loser and I wasn't really feeling it. So I decided to look elsewhere and I managed to bag this winning trade on EURUSD, which we'll look at in just a moment on the charts. But first, remember to like and subscribe to the channel below. All of the software that I'll be using is linked in the description below. Let's get straight to it. I took this trade on the Tuesday and it was taken following a series of very simple steps, which I'll show you in just a moment on TradingView, my charting software. But first, let me show you the trading data in my broker platform here on Metatrader. This is the trading account that I have for the prop firm, the 5%ers. The 5%ers, if you're not sure, are a prop firm, which means that you can trade their capital and you both take a share of any profits that are made on the account. I'll talk more about the 5%ers later in the video. This started as a $20,000 account and my target is to make $2,000, which is 10%. And as you can see, I am 3/4 of the way there. I'm getting very close. If we go to the history panel here, this is a trade that I took on EURUSD. There was actually 3 positions. I was in 2 positions at the same time. First went break even and then I decided to get back in. I'm going to talk all about the reasoning behind the trade right now. The first step I follow before I even look at any charts is to check the fundamentals, namely any major news release that is due to come out. And to do that, I always use this tool, forexfactory.com, which is a brilliant free resource. Now I'm on the calendar section and I have this filtered, only showing me the high impact news. This trade was taken on Tuesday, the 12th of November. Now there was actually big news release for the pound claimant count change, and it did produce some volume on pound dollar, but the technicals still didn't match my trade plan. There was nothing that warranted a trade, so I decided to look at a different market because I really wanted to trade that morning. That's when I loaded up the chart for EURUSD. Now this is quite a plain chart. I tend to predominantly use price action. I do use a couple of indicators, but they are not stereotypical indicators. I used to use many like the moving averages, RSI, but I find that my accuracy lies focusing purely on price action. I like to keep my charts fairly clean and neat. You might notice these vertical colored sections on my charts, the pink and the green, and they simply mark the start of the London session here, the pink, and the New York session, the green, which are generally the times that I trade the markets. It's when the volume is the highest. And so I traded EURUSD on the Tuesday morning during the London session, but I didn't actually take a trade until later on in the session. Now I said this was a simple break and retest strategy. What are we simply breaking and retesting? Well, this is where I add on my indicators. The indicator I like to use is called daily high and low. And this simply shows the previous daily high and the previous daily low. This dark blue line is the previous daily low. And if I just move up here, you can see a light blue line up here, which is the previous daily high. Now these are key daily levels. The daily is one of the highest authority time frames. It's what I like to base my trade bias on, whether we're going up or down. As you can see, if I zoom out here, just to save going to the daily, you can see from the larger perspective on the 15 minutes, the price has been coming down. We've been making lower lows and lower highs. So on this Tuesday morning, when we broke the previous daily low, naturally the weekly candlestick was bearish. We're coming down. The market is coming down. I'm looking to follow that short-term trend, looking for a short. I wanted to sell. But where was the best place to sell? Well, this is where the break and the retest comes in. So during the London session, we had a break here of this key daily level. And the important part of this is that we got a close below it. Now we did get a couple of breaks here early on in the session, but we had these wick rejections. That wasn't a confirmed break for me. We got the confirmed break when we had this large bearish candlestick down and it closed very strongly below this level. So that said to me that this was ready for a trade, and now I had something to work with to be able to find out where to get in. And to use that, you could have quite simply have set a retest at the key daily level here for a short, but I also like to add extra added confluence in the form of the Fibonacci retracement level. And I simply dropped this from the high of the previous pullback here, this little range we experienced before the break, and I dropped the low here at the lowest body. Now this brought up these 3 lines, the optimum trade entry levels, which is where I like to use to set my orders from. And so I placed an order here at the 28 level, which is the lowest of these 3. My stop was a 10 pip stop, which was nicely above this little sideways consolidation, because if we came up here, we'd probably gain a lot of momentum and push up, and it would be a false breakout. And for my targets, I wanted a positive profit loss ratio. That means I want to make more than I'm prepared to risk on this trade. So if I am risking 10 pips, I wanted to make at least 15 pips, which is a 1.5R profit loss ratio. So I set a sell limit here, which meant that I was waiting for the market to push back up to trigger me in short on this trade. I also set an alert here, which meant that I didn't have to sit and watch the screens the whole time. I would simply get an alert from my mobile phone telling me when the market had pulled back to my entry. Pretty much straight away, we got this strong push up. This little wick rejection was very nice because it was automatically rejecting this area. And price started to come down really nicely. Trade 1 was a really nice, simple, fast win. Just what I like. Now at this point, when price started to push back up here, I actually decided to get back into this position because we're still going down. And so I set another sell, but I actually set this sell a little bit lower here because we have moved down a little bit more. And I used the same 10 pip stop with the same 1.5R target, risking 10 pips to make 15 pips. Price pushed up and it triggered me in short once more into this trade. And then we got this, which is a beautiful candlestick pattern. It is a bearish engulfing candlestick. It completely engulfs the high and the low of the previous candlestick and shows that the bears are still very much in control. The significance of this candlestick is important because it is aligned with this key daily level. This is a picture perfect example of a break and a retest and an opportunity then to get in with the trend short. And once again, price fell really nicely to my target, which gave me a total of 3R on this trade. Now that was 3% in my personal account that I trade with IC Markets. But with the 5%ers, I risk a little bit less because I have my max stop to be aware of. What does that mean? I'll show you on the dashboard. Here is my dashboard for the Hypergrowth program, the program that I'm currently enrolled on with the 5%ers. Now I am still in the challenge. I'm still aiming towards my profit target of $2,000. And more importantly, I am respecting my stop out level, which is $18,800. That means if my account drops from the opening of 20,000 down to 18,800, then I will lose the program. I will fail the challenge. So in effect, I don't have a $20,000 account, I actually have a $1,200 account. And that's why I risk a lot less. If I was to risk 1% of $20,200, it would only give me 6 attempts before I could potentially hit that max stop out level, which to me is just not enough to compensate for the movements and the volatility of the market, which is why instead of 1% per trade, which is my usual risk, I actually risk 0.3% per trade with the 5%ers. It's a bit less, but I'm okay with that because they make up for it by giving me an unlimited amount of time to pass this program. Patience is the key with this account, but the potential for scaling it is so worth it. Once I pass this challenge, I will be able to scale this account up, and over time, it has the potential to scale up all the way to 4 million, which for me, it's really exciting, and I am totally prepared to be patient, working towards that super target. If you want some more information about the 5%ers, I talk more about them in this video, and there's also a link in the description below. I always find that trading can give the best opportunities if you keep it super simple. It doesn't have to be complicated, it can be hard enough as it is. But by using a series of simple signals such as incorporating a key daily level, looking for a candlestick pattern, and maybe adding an indicator of your own, personally I like to use the Fibonacci, you can develop a strong trading plan that can give you a real edge to the market. If you've enjoyed this video, please let me know by smashing that like button. Don't forget to subscribe to the channel below, and I'll catch you in my next video. Thanks for watching, bye!